other exposure there is. I mean, the credit standards have been pretty darn good, and the quality of what's on the books has been terrific, and the liquidity and all of that. The banks are in a whole different situation than they were during the 10 or 11 years ago. But there was, you don't know the nominals that topple when airlines get bad, and then that affects energy demand. It's just they're using less fuel than they were 3 weeks ago. So there's ripple effects, and there always will be in recessions. That's the nature of recessions, as you get ripple effects. We get ripple effects on the railroad, but there's just there's less intermodal traffic moving now because of the supply chain interruptions and all that sort of thing.
We had a terrible financial crisis in 1991. I think almost every major bank in Texas went under. Bank of New England, one of the oldest banks in the country, went under. It's like, in 08, 09, the banks were doing these no-doc loans and second mortgages and home improvement loans, and people were buying boats with it. Now the banks are being much more careful. So we've gone through other crises. Some banks will go under. 400 went under after 08, 09. Now we have stress tests. I think the banking system has improved. There'll be some companies go under. That's the nature of it. It's nothing like, imagine 1980, 81, we had double-digit inflation, double-digit unemployment, and people were the Japanese were going to take over the world. I mean, we were hopeless. I mean, there's always something to worry about. I'd really, in my over 50 years of doing this, I think I'd be worried if there was, somebody didn't bring up something to worry about. That's the nature of the business.
Because I'm a Reagan guy, and I was there. I started at Merrill in 1980.
Well, we've had 13 recessions since World War II, and we've had 13 recoveries. Maybe we're going to have one. If this is a recession, it's probably the most predicted one ever. I never know when we're going to go. I'd love to know the future. I think it would help. I'd be a better investor. I'd pay $5 extra for next year's Wall Street Journal. It would really help. Right. I cannot predict the future, but this recession is so expected, so predicted. Maybe it's coming. I don't know.
Always something to worry about. If you own stocks, there's always something to worry about. You can't get away from it. What happens in the 50s, people were worried about the only reason we got out of the Depression was World War II. We got another recession in the early 50s. They said we're going to go right back into a depression. People were worried about a depression in the 50s, and they were worried about nuclear war. I mean, back then, the little warheads they had then, they couldn't blow up McLean, West Virginia, or McLean, Virginia, or Charlestown. Now, all these countries that end in STAN, there's 9 of these STAN countries that have come out of Russia. They all have enough warheads to blow the world up, and no one worries about it. When I was a kid, people were building fallout shelters, and we used to have this civil defense drill. Remember this one in high school? You get under your desk. I never thought even then that was a particularly good thing to do. They'd blow whistles. Some people in a hat would all get under our desk. But in the 50s, people wouldn't buy stocks, except for the 80s. The 50s was the best decade, the century of the stock market. And people wouldn't buy stocks in the 50s because they're worried about nuclear war and they're worried about depression. Then people, remember when oil went from 4 to 40 and it was going to go to 100 and we're going to have a depression? Remember that one? Well, about 3 years later, the same experts, now higher paid, oil's now at 10, and they said it was going to go to 4 and we're going to have a depression. And then the Japanese, remember how the Japanese were going to own the world? Remember that one? And that we're going to have a depression? And then about 2 years later, we're all worried about Japan collapsing. And this is the most absurd thing I've ever heard. There's a company with a 20% savings rate, incredible workforce, incredible productivity, and people were saying we're going to have a depression because Japan's going to collapse. And they had, on their prayer list, they loaded Mother Teresa and crippled children, and they were praying for Japan at night. It's unbelievable. I mean, the LDC debt. Remember the LDC debt? Remember that one? All these countries, all Chase had lent their net worth to Brazil, Chile, Peru, and all these other countries, and so and all the other countries. And LD said they were not going to pay it back, and we're going to have a depression. It always ends and we're going to have a depression. Or the Great Depression. We're going to have the Great Depression. I never could quite understand that adjective in front of depression, but the Great Depression, or the big one. The big one's coming. But all these countries, and now I understand, these are called then they were called less developed countries. Now, we used to call them underdeveloped countries. Those are all wrong terms. Those are not politically correct. You have to call these emerging countries. You can't use less developed or underdeveloped because that's, in fact, the other day I heard the politically correct term for somebody that's overweight is laterally challenged. That's so there's always something to worry about.
we do benefit when others suffer. That doesn't mean we enjoy their suffering, but times of chaos in financial markets, the situation that existed in junk bonds in 2002, the situation that existed in equities, back in 1974. So I don't think you'll necessarily see a contraction in credit. I think most authorities are very reluctant to really step on the brakes. It's too easy to figure out who did step on the brakes. But you could very well see some exogenous event that starts feeding on itself in markets. In fact, I think it's much more prone to feed on itself in markets than in most periods in the past. If you really got a shock to the system. And that would result in a huge widening of credit spreads, cheaper equity prices, all kinds of things that actually are helpful to Berkshire, because we usually have at least some money around to do something at times like that. There will be periods like that. If you go back 30 or 40 years, when credit contracted, it just really wasn't available. Charlie and I went through a couple of periods like that. We were trying to buy a bank in Chicago 40 or so years ago, and the only people that would lend it to us in the world, because the banks weren't lending for acquisitions, we found some people over in Kuwait who said they'd lend it to us in dinars. And we thought, it might be fine to borrow it, but when it came time to pay them back the dinars, they would probably be telling us what the dinar was worth. So we passed on that particular deal. I mean, you had real credit contractions then. And of course, the whole reason, I would say the major reason the Federal Reserve was established was the huge contractions in credit that were felt, particularly here in places like the Midwest, where they were dependent on correspondent banks in the larger cities. And when those banks had problems, the banks here got shut off, and we really needed a system that would not have that happen except by design. And I would say the Fed, by design, is probably not going to produce any credit crunches. Charlie?
Well, the last time we had that credit contraction, we made a quick $3 or $4 billion, and we were acting with vigor. The whole investment world is more and more competitive, and if you talk about a real credit contraction, which gums up the whole civilization, no one would welcome that. And I would predict that if we ever had a really big credit contraction, after a period like the one we're in with all this excess, which is causing so much envy and resentment, that we would get legislation that most of us wouldn't like.